In today's video, we're just going to take a look at the timing cycles in the S&P. Now, these have been on my updates, and I know that I've sounded like a broken record. And the last time that we actually had a really nice cluster of cycles in January, the market basically didn't do anything. It just stalled temporarily. You had just a micro pullback, and then we went on to new highs. But this time we have the confluence of 17 weeks up versus 17 weeks up. We have a high-to-high cycle. 1272 came the week ending March 10th. We had another time projection that came in the week ending March 10th. We had high-to-low 1618 in time the week ending March 10th. And then also the low-to-low 100% in time the week ending March 10th. The only one that came in just before that was the alternate time projection, where you had the 17 weeks up and the 17 weeks up, and that came in March 3rd, March 10th. So we'd been watching this grouping of cycles on the weekly chart as possible resistance, along with the fact that, you know, we have met minimum targets off of the February lows, and we also had some extensions met to the upside, and many moves tend to terminate at extensions. And then also the most recent swing up was very similar to some of these prior swings up. So have we finally seen some sell triggers? Until today, we had only been seeing some minor sell signals. But in today's session, we finally had the 5 cross back below the 13, and you have to keep your eye on that, because that means that this market is vulnerable. I'm not saying that you can't get a bounce after the kind of decline that we experienced today. You could, but we're actually going to be watching to short those bounces until proven wrong. Okay, but that has to be set up as the market unfolds. That's one of the things that I do in the trading room during the day, and you know, come and check that out. But just be aware that this last high is now considered key and pivotal, and we're finally starting to see some more important sell signals on the daily chart. So know that we are vulnerable to a deeper downside correction.